On today's episode of Heist Seller Stories, we chat with Matt Howitt. Along with being literally one of the smartest people I know in the Amazon game, he's the CEO of Profound Commerce, where he's acquired 4 brands, scaled to 8 figures, and had a meteoric rise from Harvard graduate to Amazon e-com entrepreneur. Let's go. I just became a partner in my favorite Amazon software, Sellerize. Be sure to check it out. I use it for all of my review automations and review dashboard, my daily, weekly, and monthly profitability analysis. You can swap between different accounts if you've got multiple accounts in international marketplaces. It cuts a financial P&L view, which is awesome. You can get reimbursements automated. Oftentimes Amazon owes you hundreds, if not thousands of dollars. Automated process to submit tickets for that and make money and recover costs. Smart alerts. If anything bad happens to your listing, it notifies you. If you've got larger products, you can do shipping optimization. It's got tons of URLs. Guys, it rocks. Check it out, sellrise.com/heist for 1 month free. We'll also do regular drawings for anyone that signed up under the Heist discount code to get a free year free. On to the interview. All right, well, welcome back to another episode of Heist Seller Stories, and I think this one's going to be a treat for everybody. I'm trying to find more people that aren't part of the typical Amazon public scene, and one of my top picks that I've wanted to chat with for a while since I came up with a concept of doing these videos is what I like to refer to as my Amazon brother, Matt Howitt. We actually met about a year ago through a mastermind that we're both in, and just have a ton of mutual admiration. If I've got a tough business question specifically related to Amazon or growing and scaling my business, the first person I DM is Matt. And frankly, he's got a really compelling, interesting story, both pre-Amazon and then into building an 8-figure brand and buying Amazon brands really before it was cool. So super stoked to have you on, Matt. Thanks for joining me.
Adam, thanks. I'm excited to be here. I love your channel, as you know, my fellow Amazon brother, and I think it's exciting to chat with you in this context. Obviously, we talk all the time about all sorts of stuff, but this will be fun. So thanks for having me on, and hopefully you can make this a good one for the audience.
Yeah, totally, man. So you're have 5 amazing brands, I think it is. You're the CEO. 4. Okay, 4. CEO of Profound Commerce.
Yeah.
8-figure seller.
That's right.
Just fantastic assets. We will get into all the Amazon stuff, and I'm curious to get your kind of take on that.
Yes.
But you have an interesting story. I mean, you went to freaking Harvard, was a software executive pre-Amazon. So let's talk about the origin story pre-Amazon. How the hell did you go from that to this? And start wherever you want to start, and we'll take it from there.
All of that is guilty as charged. You know, the joke about people who went to Harvard is, how do you know they went to Harvard, is that they'll tell you. So thanks for preempting me in that regard. I appreciate it. Makes me maybe look like a little bit less of a jerk, but I don't know, maybe not. So I live in Austin, Texas. I've been here for 24 years. Grew up in the Boston area, went to school in Boston, as you just said, and moved to Texas after I graduated. And I moved here because I was really excited about a specific company called Trilogy Software, founded by a actual veritable reclusive billionaire, a guy named Joe Lamont, who has been a mentor for me for a long time, who is, I think, an incredible business person. And everyone can Google Joe and see all the stuff that he's done. But that's what got me to Austin, and I worked at Trilogy. I joined their training program, which was called Trilogy University, in 1997. And so those of you who have heard of this, I am TU97, and that got me to Austin. I worked for Trilogy for a little bit over 3 years in a bunch of different roles, but sort of my final role was running engineering, the VP of engineering, in fact, for a subsidiary called PCOrder.com. And PCOrder.com had the vision of selling computers over the internet, or actually more appropriately, helping internet retailers sell computers. And so this is in the day when Dell and its direct to consumer model was taking hold. This was before direct to consumer was even popular, I think, as a term. It wasn't even a term that was coined at the time, honestly. And so it was the early days of the internet, like 97 to 2000. I worked for an original.com. We actually went public, wow, just like all the other ones, and we crashed just like all the other ones. But for a while there, we had tens of millions in revenue and literally billions of dollars in market cap. So that was quite a ride for somebody who was 25 years old at the time. That was like, I think we went public in February 99, and I think we were sold for scrap by about November 2000. So it was a good 18-month run there on the public markets for PCOrder.com. But I learned a tremendous amount both at Trilogy and PC Order. I ran software engineering, as I mentioned, and really was in way over my head, honestly, at that age. Was running a 50-person team. At the time, it was sort of a funny thing because it was the internet and it had changed everything, and it really had changed everything, even about software. I mean, in the old days, right, before internet, before SaaS, software was shipped on CDs or tapes or floppy disks or whatever, and it was on a very, sort of predictable release cycle because there was a manufacturing wave that had to happen. So, when you wanted to cut a hotfix or a new release, like that would meant like manufacturing CDs or discs or whatever. So in the old days, we used to ship software every 6 months rather than every 6 hours. And so when the internet hit, it completely changed how software was built because, as I said, you could iterate in a way that you could never iterate previously. And of course, none of the tools that software engineers have today to build the internet existed. And so it was the Wild West of trying to figure out how to do this. But I got to be head of engineering because nobody knew anything about how to build software for the internet those days. So it didn't matter if you had a 25-year software career or a 2-year software career like I had at that point. You were sort of qualified to do it because everyone was equally qualified or unqualified, as the case may be. So that launched my career in software. I have a economics undergraduate degree as well as a concentration in computer science. Took a bunch of computer science classes at school, but don't actually have an official computer science degree. Only have an economics degree, but have been doing computer stuff for years and years and years. Started my first sort of business when I was 13 years old with doing software stuff. So it's sort of in my blood. And I did that for about 15, 16 years after that, so maybe 20 years total before getting into Amazon, and ran software engineering and then product management at 4 or 5 different companies here in Austin over the course of that run. So a bunch of them had varying levels of success. All of them were great in terms of learning experiences. As things like SaaS started to evolve, like say in 2008 or so, started working for a company that was building a SaaS product. So done a bunch of different things over the years, always focused either on consumer internet or enterprise software. And so that has always been my passion, and something in product, whether it was actually doing engineering, running engineering teams and building engineering organizations, or it was running product and running product managers and building the specifications and understanding the market and figuring out what we need to build for users and having that user empathy. I did all those things before I ever got to Amazon, and had a very long career as executive. Reported to 4 different CEOs, sat on the exec team of a number of startups that had raised tens of millions of dollars and were very successful in terms of revenue growth. Went to many board meetings with sophisticated investors, presented, et cetera. So I kind of had a long career as an executive before I started doing Profound Commerce, but I've always been a doer. I've always been a player coach. I mean, even when we had big organizations, I would still either read code or write code a little bit, or product management. I was, opinionated about features and very involved in design reviews or whatever. So I love doing in addition to managing and leading, and every single role I've ever had, whether it's at Profound Commerce or any other ones beforehand, I've always been very focused on that. As you well know, Adam, I'm a detail-oriented guy. I'm an opinionated person for sure. So you roll all that together, and you get me, and then you get me founding Profound Commerce in summer of 2018.
So that's a good segue. So I think thanks for the background, by the way. There's a couple nuggets in there I didn't even know about, so it's good to hear the full story there. I think there's a bunch of different folks that have kind of entered the Amazon space, and I think some of it's era based, some of it's kind of motivation based. I would probably put them in three camps. One is just like the diehard hustler that's never going to work for anybody. Started selling on eBay and kind of scrapped their way together, and first mover advantage, just had the cojones to push the chips in before anybody else did and made a whack load of money, and just purebred entrepreneurs, right? Like they couldn't function in a normal job. I think there's the other people that are kind of supplemental entrepreneurs. So it's like, hey, it's never going to be my full-time thing, but it helps me, support my family, and it gives me kind of a, something to do on the side that's fun. And then I think there's the third, which is ironically we're mirrored, and that's why I've kind of tapped you for a lot of advice over the last couple of years, which is just folks that come from a more professional background. They have no financial reason to leave. In fact, it might actually be stupid to, deshackle from the golden handcuffs, so to speak, leave a relatively cushy, high power, like you have everything you'd ever want to do in that corporate job. What for you, and I don't know if it was a light switch moment where you just like it was a fundamental event, or if it was just a slow bleed away from corporate life, but why would you leave an executive software career to kind of go stick your neck out into the wind and go into this entrepreneurial venture? And I know it was a bit of a blend, but like just walk me through that process a little bit. I'm fascinated.
Yeah, I mean, it's a great question. I mean, as I mentioned earlier, I started a company when I was 13, and built it all through high school, and so I've always been entrepreneurial. And honestly, and you and I have talked about this a little bit. I sort of got on the golden handcuffs path early. Like I got to a job that was treating me really well and paying me honestly a stupid amount of money for someone who was 25, and that feels really, really good. And then, I just built on that for years and years and years and years. But I always had, sort of something kind of in the back of my mind or whatever that said, you should get out, you should go do your own thing, et cetera. And, but the problem was I kept, essentially getting, greater and greater responsibility. And with that came greater and greater compensation, and new opportunities came along that were just kind of insane in terms of what I thought they were offering me in terms of scope of responsibility, and also potential compensation, or specific compensation, and upside in the form of stock or bonus or whatever. And so I just could never really get off the treadmill for honestly like 20 years. I got addicted to that, but I always had this thing in the back of my mind was I should do something more entrepreneurial. Like that's what I really enjoy. And the moments I think even in my former software executive persona that I was the most happy was when I was working on in conjunction with the rest of the business something really entrepreneurial. We were starting a new product, or we were trying to tackle a new distribution channel, and that had implications on product packaging, or sort of like how we even charge customers, these kind of things. Like that's always what got me, the most excited, was doing something that was innovative and groundbreaking on the business side, and to some extent even more than on the engineering side. I mean, I thought it was awesome when we would come up with some amazing, breakthrough that solved the problem better from a software side. But what I really got excited about was when I figured out how to unlock, the next level of revenue, or figured out how to go from a $400,000, average contract value to a $1 million average contract value at enterprise software, or how we figured out, at Retail Me Not, which is one of the companies I worked at, how to drive conversion, up through A/B testing, a platform that we built from scratch, but that I oversaw. But like the cool part was not building that; it was driving from 7% conversion to 10% conversion, and seeing that put 50 million more money on the in revenue on the bottom line in a given year or something like that. And so that really is what always drove me, and I knew I needed to get back to that. And so it was just a long process of sort of kind of talking myself out of this very great security I had, and it was a lot of cush job, so to speak. Felt like a lot of work at the time, and a lot of blood, sweat, and tears, and there certainly were a lot of people in the organizations I worked with that were demanding. It didn't feel easy ever, but it wasn't the same kind of risk as being an entrepreneur, where you stick your neck out, and sometimes your cash, but for sure your reputation, particularly if you raise money from external investors. and say that you can go off and do this, and that you can be successful and grow a business. And so it's just very different. But it kind of was an evolution, is like in the sense of I just over time realized that I really needed to be doing that stuff and not doing to be satisfied and excited and motivated and engaged, rather than hiring the next amazing engineering team to build this awesome new thing for whatever company I was working for at the time. And so that's really what drove the transition, was sort of discovering what really made me excited and engaged when it came to work and being at the office.
So then let's kind of get into the fun stuff, the action. So you can either buy or build kind of to get into the e-commerce game. How did you go about doing it? And let's kind of pull the thread back on how we got into Amazon.
Yeah, I mean, I have, even when I was an executive, I was always interested in doing various projects on the side, working with entrepreneurial people, giving them, funding them, and small checks. I'm not a big check writer, honestly, but I've written some small checks in my life, and so I think it was just one of these things where I started watching the internet, the small internet company space, and seeing the rise of the brokers. Like I think starting in even 2010 or even 2008, I was on mailing lists of business brokers. I can't remember exactly when Quiet Light Brokerage got started, but I think it was in 2010, 2012. And I'm probably one of the first few thousand, maybe even first few hundred people who were on that list, sort of looking at deals and deal flow. And actually I bought my first internet business in 2014, completely unrelated to Amazon or FBA, that is a wedding website that I still own to this day, and have a four-person full-time team, and 4 or 5 more part-time people who work on it, and have been doing that essentially continuously since 2014. So I started to get interested in Amazon when sort of in the early days when Amazon businesses were coming on the market through brokers, which I would say is in the there's sort of, Adam, you and I talk about this, like the 2015, 2016 cohort who started businesses on Amazon. And then, some subset of them, sometimes a small, maybe a small subset of them, had pretty meaningful businesses almost 2 years later,
100%.
right? 7 figures, some of them even 8 figures, essentially created this, company or this business or this brand completely out of thin air in a year or two. And so that these businesses started hitting the broker websites and mailing lists, 2018, say 2017, and all of a sudden it seemed like there was just a torrent of them. Both Thrasio and a company here in town, 101 Commerce, were getting started in early 2018. I think this recently, Thrasio raised their seed round in early 2019, maybe. And I had been a veteran of receiving all of these broker prospectuses for a long time, had relationships with brokers, et cetera, and I started to see all this incredible Amazon deal flow that started to come through. And I had look, we just talked about me being a software executive or consumer internet, buying a wedding website. None of those things have inventory, right? Like these are completely different kinds of businesses than Amazon FBA, but I was just amazed at what was going on in the space even back then. And so I started to get interested in that and started to decide, well, maybe I want to dive in here and buy one of these. And so for me, it was never a question of like, I have a product idea. I took an Amazon class, like the different, whatever that was, amazing group classes, back then. It was never any of that. It was just me, being immersed in the space of looking at internet businesses and realizing like that the kind of, it wasn't today's future. Today I could have never predicted back then, but like seeing that there were lots of interesting Amazon businesses coming on the market and realizing that there was probably an opportunity there. And as I dove in more and more, and we talk about, sort of what I saw even back then, I realized there was an even greater opportunity than I ever realized. And so that sort of put me in business in 2018 of buying Amazon businesses.
All right, so you picked up brands. How do you, like, to your point, there wasn't as much of a playbook back then. And I came from the second or third wave, which there was already people out there talking about stuff on YouTube. There's numerous courses. I was able to learn through the information that was out there and not through the school of hard knocks. So walk me through what it's like, a dude, that software executive that owns a wedding website that decides to buy an Amazon brand. How did that go? And just let's walk through that.
Gosh, when you
That
say it
first
like
deal.
that, it sounds preposterous. Yeah, I mean, so look, I knew something about looking at businesses, how to value them, looking at P&Ls, looking at growth rates, looking at things like margins, et cetera. None of that changes. That is the same stuff in the business world versus
So true.
the Amazon FBA business world, right? Like that stuff doesn't change. So I knew how to do all that, and so I was able to evaluate sort of what was going on with the various businesses that were coming on online, and what I thought about them and what their potential was, and did I like the product, did I like the niche, did the numbers work around growth rates, margin, revenue, profitability, advertising spend, all these kind of things. And over a couple of month period, I sort of just looked at enough of them to start to get confidence to know what the good ones were and what the bad ones were, or the not as good maybe. I don't know if there were any bad ones coming on the market back then, honestly. But sort of to evaluate at them, and I started to develop, first in my mind, and then some written thoughts about what kind of things do I want to buy and why, and how much, what sort of to develop a playbook around criteria. So I mean that's kind of like the first step is what do you want to buy and why. Of course you need the funding to do that. We can talk about that in a second, but you do need a set of criteria that you use to evaluate. And so I started developing that and thinking about what was important to me in terms of these businesses. And it was nothing that wouldn't, again, the rules don't change just because you sell on Amazon. Like business is business. I think there are things that are different about Amazon, don't get me wrong, and some sort of unique attributes of it that are both positive and negative, honestly. But I think that, you start with that. And I just leveraged my 20 years of knowledge of both, being an executive and leader and manager, and also, my experience from buying the wedding website and sort of the mistakes I made with that one, because, I think every time you do a deal, you learn something about what to do, but also what not to do. So just sort of filed all that up in a pile and said, okay, well, this is what it's got to be, and started making decisions.
So
That's how we started to think about what to buy.
yeah, so I think that's the other thing that's interesting. So the story is you didn't you start with one. You've obviously kind of parlayed that into four now. That thesis
Yeah.
is super in vogue now. I mean, we know the story, right? There's 20 plus aggregators. It's just kind of like an insane thing. But not only was there not a playbook for Amazon back when you kind of started to kind of get into things heavily, but there certainly was a playbook around this. Hey, let's like fold a number of these different brands into one organization, use this operating platform, build and scale based on acquisition.
Yeah.
Again, 101 had kind of tried and failed. And you kind of had that story to reference, but that wasn't necessarily an encouraging story. Thrasio, obviously.
Yeah, I mean, 101 hadn't
Okay.
failed at that point. I mean, I don't know if they really
Fair
ever
enough.
failed. I mean, they merged with Goja, and they exist to this day. But certainly those guys were very aggressive early on, and talking to a number of them who I know from Austin, they definitely hit the gas really hard and probably made more than their fair share of mistakes early on. But yeah, absolutely. I mean, only Thrasio and 101 were really around, and this was not a model. This is what I would describe. Now this is a model, and there are 50 different companies, and 3 billion plus have gone into the space, and 1.7 billion of that is Thrasio. Like on and on and on. Like there was none of that. And we can talk about. I know you mentioned operations, your previous question. We can talk about that more, but I mean, there was nothing about how to go and build this thing and stitch it together. There was nothing about how to go raise money. None of those, and there was nothing about how to operate them as a portfolio and as a conglomerate. I mean, I don't, people now describe Amazon FBA businesses as an asset class, which I sometimes, sort of giggle about, but also think there's some real truth to that. But like the idea that this was an asset class in 2018, I mean, I would have been laughed out of any, Wall Street bank, et cetera, that I went and visited. I've discovered a new asset class, just like the crypto guys in 2011 who were saying they had discovered a new asset class would have been also laughed out of, the bank, if you will. And so, I mean, that's all of the stuff that we were wrestling with when we were getting started. And so, you find a way. I mean, look, entrepreneurial grit, like you find a way, right? If you believe in this idea enough, if you can pitch it in a compelling enough way, and you know some people who have money, and you sort of know how to work the network, if you will, of investors or of rich individuals, angel types, or even not angel types, just people who make investments in real estate or whatever. You try to stitch something together, and that's what we did at first.
So
we're funded by a large number of individuals in that regard, and there was no playbook. I had to explain. Most people didn't even know what a third party marketplace seller was on Amazon, or that there was this opportunity. They had no idea. I had to start from scratch in my explanation of all of that when potentially talking to someone who might be interested in investing.
So let's kind of get into that a little bit, because I think this is kind of interesting, the not having a playbook and kind of just figuring it out. So you got the wedding website, you decided, hey, this Amazon thing, you started seeing these physical products brands come up, specifically Amazon, decided to kind of throw caution to the wind, buy one of those. How do you then parlay that into 4, and walk me through your experience raising money, building the organization, building that platform without the playbook? Because I think it's interesting.
And don't forget, I also still had my full-time job at this point. We did our first transaction in August 2018. It was when we bought our first brand, and I didn't leave my day job, as I sometimes called it, which was VP of Product at Convey. And thank God that my boss and those investors now know all about this, and so I can talk about it freely. But even at the time, it was sort of on the DL. I didn't leave my full-time job until June 2019, June 30th.
So you had a 10-month run or whatever.
I haven't even been being an Amazon aggregator full-time for more than 24 months. I mean, which of course makes me like the graybeard of the group, because most of them, besides Thrasio and Mohawk and Goja, were started in 2020. So the idea that we were actually founded in 2018 is kind of amazing, honestly. So what happened was, just sort of going back to the origin story in the beginning, I'm monitoring the deal flow that's coming through on the broker list. I'm not thinking at all about proprietary deal flow or reaching out to anybody who I might be interested, or crawling Amazon to find products and see if those people wanted to sell them. None of that stuff. It was all through the brokers. What's coming from Quiet Light, from website closers, from website properties, all these different places. That I've been on these mailing lists forever, but now all of a sudden it seems like it's all FBA. That's all that's coming through the pipeline. So, I started to get an opinion. I'm looking in June, July, even earlier, maybe May 2018, of what I like, as I was describing. And, one particular brand hit the market in July, which is the first brand we bought. And, one thing that's different about us is we freely talk about what our brands are. So you can go to our website and see them, profoundcommerce.com. And, the first one that we bought is Hudson Durable Goods, which is on the site. We don't put all of our. We're not gonna put every brand I think that we ever buy on that site. I'm not really sure what our policy is there exactly, but the brands that I'm super stoked about and feel like the world should know about and share, they go on the website for sure. And Hudson has always been one of those. So that came through the broker channel, through Quiet Light. I got the prospectus. I read it. I looked at the financial model. I spent some time doing research on Amazon about what was going on in that space for the products that Hudson sells. I looked at the review count. Before we even had the words review mode that everyone could say off their lips instantly like that, I had some at least understanding that the more reviews you had, the better position you were going to be in, and the greater durability and longevity that your business was likely to have. Not that you couldn't be usurped or a disruptor could come along and take your, sort of take a lot of your share. I never say take your business, but take your share on Amazon. I sort of had some implicit understanding that more reviews were valuable. I mean, it's kind of obvious at this point, honestly, but and so I looked at all that with Hudson, and I looked at it relative to competitors, and I looked at growth rates. What had Hudson done in June of 2017 compared to what it had done in June of 2018, and because that was the last month we had data for, because it was listed in July, mid-July. So I just decided this is a really good one. And I went through the standard process that everybody goes through with the brokers, which is, okay, I like this business, get more information from the broker, set up a call with the seller, talk to the seller, what does the seller say? Do I like what they say? How do they think about the business? What do they do? Have they done some bad stuff? Do they, there's lots of malfeasance that happens on Amazon. So how much of that, has been going on, if any? And I liked it, and I decided, what? And I think this is the first one that ever came through where I made an offer. I basically made an offer and, went back and forth with the broker and with the seller and got the LOI signed. And, it was sort of off to the races. Of course, at the time, and this gets into the raising money, I didn't have any money. I mean, I had some, but I didn't have enough to close. I didn't have enough for the cash payment at close. I didn't have enough for the structured payment over time. And, I knew how to do some of that because I had bought the wedding website. And honestly, the brokers had created a standard way of buying these things. I think, they had standard deal terms and points. Like a lot of that has evolved since then, all these concepts that have come in, like stability payments and earn out, percentages and how they work and how many years they're over, all this sort of stuff has evolved rapidly in the last couple of years, even the last, year with the enormous influx of aggregators now. But all that stuff, there were sort of nascent versions of it or prototype versions of it back then. So, we did all that and we had the LOI and we went into due diligence and, little did the seller know that I didn't have all the money I needed to close the deal.
Yeah.
He does now, so I can talk about it freely. And we got the deal closed in 35 days from the date of LOI signing, roughly. I think it was 35. And so everything was fine, thank God. But yeah, I had to go turn around and simultaneously do due diligence as well as raise the money. And so how did I do that? I guess is the natural follow-up question. I started with my network, and I'd been in Austin for a long time. And, I had been fortunate to have been introduced to some investors who helped me buy the wedding website. So the first call I made, of course, was to those guys, and they're semi-professional investors is what I would describe them as. They own several businesses, they are operators themselves, but they have amassed, a nice little fund of their own over time that they use to make investments out of. And they probably make, a few per year, and, over a 10-year span here, my guess is they've made 20 to 25 different investments, including now in our wedding website, as well as all 3 rounds of Profound Commerce where we've raised capital. So I went to them and I asked for all of the money needed to close the deal. And they looked at me and said, well, one, this is crazy. Like, you want to sell this commodity product on Amazon and you don't own the customer, as near as we can tell, because you don't get any customer data from Amazon. And it's, how is the product really differentiated? And like, what are you even talking about with reviews and all this crazy stuff? And I was like, guys, I get that there are some, differences here between any other deal that you've done, but look at these growth rates and think about how e-commerce specifically, is going to evolve over the next couple of years. Like, this is the proverbial Warren Buffett, you're buying $1 for 75 cents.
Yeah.
And they were like, awesome, that's great, that sounds amazing, we'll give you half the money that you're asking for. And I was like, oh, okay, well, thank you, I think. And of course it was thank you, but it created a new problem, right? Which is, they're like, go line up some more investors, particularly like if you think you're going to do more of these deals over time, you actually need to spread this out. We're not going to be able to be your capital source for, if you're going to go really big in this strategy, you need other folks who are, interested in further follow-on rounds here. And, these guys, they're experienced in a lot of ways. And so, as you can hear from the wisdom in what they told me, because they were 100% right. But of course I was thrown into chaos because I thought I was going to do this in one phone call. And it turned out it needed to be a lot more than one phone call and one meeting. And so over the course of the next, month, as we were doing due diligence in parallel, and also, of course, working my day job and also somehow running my wedding website, which was mostly honestly mostly done by the team and not really done by me, but at least overseeing it. I proceeded to call a bunch more people that I knew who I thought would be interested, none of whom were related to me because I didn't want to do that, and proceeded to line up 6 more investors to fill out.
This is all
the
35
round.
days from start to finish, right? Like all this stuff's transpiring and due diligence.
Correct. Yeah. I mean, the first week was figuring, was realize that, the way these things work, you send an email, and
Yeah.
it takes 5 days to get a meeting because people are busy. Then you go and, you maybe you talk to them on the phone first for a few minutes, and then it's like, well, why don't you come in? Pre-COVID, people used to meet in person to raise money. I think that's done less and less now. But, why don't you come in? Well, when can I come in? Oh, another week. Okay, now it's 10 days into the 35-day period. Okay, this is really interesting. We'll think about it. We'll get back to you soon. Okay, guys, I need you to get back to me soon. So these guys were great. They get back to me in 2 days. This is awesome, Matt, but we can only give you half the money. Go find the rest of it if you want to go do the deal. And then, it's like, okay, now we're in day 12. And so it's just the clock's ticking. And, we had signed an LOI that said we would close in, less than 45 days, if I remember correctly. So, you just hustle. And if you don't know anybody and you don't have a reputation, or you're trying to go through a bank or whatever, that's pretty darn hard. I was fortunate in that I did have a long track record of, being at least I wasn't the sole entrepreneur of any of the companies that I was working for previously, besides the wedding set website. But I knew how to do this, at least to some extent. I could formulate a plan, I could pitch, I could say how much money I needed to raise. I mean, a lot of times people, they want to go do something, but they don't even really have a plan. They don't know how much money they need. I mean, you and I have been through this, even talking about your various ventures. It's like, well, how much money do you need? And your answer is, well, I don't know. And it's like, well, you can't raise money when you don't know how much money you need. And it really is true. So one thing about having a deal is you do know how much money you need. You know how much you agreed to pay. You have somewhat of an idea of how much working capital you might need on top of that in order to operate the business and be successful at first until you start, generating cash from it. So that, having that deal in hand does focus the mind in terms of what do you need to go ask for people for money. And so, that's what I did. I knew what number I needed. I knew what number I wanted to raise, and I went and said I wanted to raise this money, and they said, great, here's half. Now go find the other half. And then I went to these other people and said, here's the kind of check that I need you to write. I'm looking to, I'd love to find one more investor, but if that's not realistic, this is the minimum amount I will accept from you. And a couple of those investors I talked to raised the minimum amount, and then a few more kicked in a little bit more, and that got us to the promised land, if you will, of having enough money. So I had to go then, paper all of that, as we would say, which is, create the documentation around the round, actually give them wire transfer information to send the money to me, get all those documents reviewed, obviously drafted by my lawyer, signed, etc. I mean, this is what it takes. But I think what's interesting about this is you do need a wide range of skills here to pull this off, right? You've got to be able to pitch. You need somewhat of a network. The pitch needs to be compelling. You've got to have a plan. Everyone says a business plan. I mean, sure, I guess it is at the end of the day a business plan. You need that. It doesn't necessarily need to come in the form of a 40-page document, but you've got to be able to talk about what the opportunity is and how you're going to attack it and how you're going to be successful. And then what happens, if you are successful, what's next? Because investors want to know that. And then, of course, the very important thing, what are the returns? How much money am I going to get out? How quickly am I going to get that out? Am I going to get, what kind of structure is this? Is it debt? Is it equity? Is it some combination? All of these things have to be sorted out. So you got to, I basically instantiated all of that in 35 days and closed the deal. And, the fundraising closed on day 33. The wire transfers came in. And then the actual purchase and sale agreement, after we had done due diligence and we had negotiated that, or asset purchase agreement in this case, get the deal done. And you got the money, and basically the money comes in, and then the money, pretty much most of the money goes right back out, to the seller. And so that was that. We, flip you the keys to the Amazon business, so to speak, and now you're selling on Amazon. And that is literally how it all started. And it was obviously a pretty intense 35 days of juggling all that stuff. But I did not trade it, obviously. It was not, it was incredibly rewarding and fun.
So yeah, I mean, that's a hell of a story. I mean, just insane. And it just shows you the kind of the grit of entrepreneurship, which is solving problems and just figuring it out without a clean kind of map. So let's kind of turn the page a little bit. So you really made that first deal work really well. So juggled a lot of things. You then transitioned. You bought a number of other brands. Ultimately, left the day job.
Right.
Kind of sculpted what I think is actually a really impressive portfolio of brands and a team behind it. I think one of the things that I kind of tap you on in terms of know-how, I think we both come from a world where we've managed very large organizations and teams. But when you're building it from scratch and kind of adding those individual parts and pieces, and a lot of it's virtual. It's a distributed kind of business model. It's just unique, kind of doing that from scratch and not stepping into it. So, and I think, going from 6 figures to 7 figures is kind of one thing. Going from 7 to 8 is probably almost harder than going from 8 to 9, frankly, because I think some of the plumbing is similar from 8 to 9. You have to have totally different plumbing from 7 to 8. So, walk me through just in terms of how you guys operate your team, how you've built it over time, and some of the things that you've had to level up your business to go from, a side hustle, one brand that you bought, to 5 and cresting into solid 8-figure business.
Yeah, I think that's a really interesting chronology and evolution, and I agree with you that 8 to 9 is easier than 6 to 7 or 7 to 8, honestly. And so, to pick up the story a little bit, we operated that first brand, Hudson Durable Goods, through the holidays. And sort of at that point, my eyes were opened to what the opportunity really was. We had tremendous year-over-year growth, and we were doing numbers, on a daily basis that were just honestly shocking to me in the December period. Like we have a great, it's a great seasonal item that we sell at Hudson. It's highly giftable. And it's just amazing. And we were fortunate to have enough capital to be, and sort of enough analytical ability to know what inventory situation we should be in and how much to buy. And so we had pretty much gotten that, and not perfectly because you never get it perfect, but we had gotten it pretty much right for that 2018 holiday season. And so that's what I decided, okay, this is way more than a side hustle. This is not like the wedding website, which I've owned for 6 years or 5 years for this point, and it's kind of a side project. This is a real strategy, and it needs to be my full-time job because the opportunity here is just enormous. And so when I made that decision, it was over the holidays, over Christmas, winter break, December, January. And I came back from this break in January thinking to myself, all right, this is it. Like, this is an exciting entrepreneurial opportunity, and I'm going to finally kind of convert on all of my executive experience over the last 20 years and go do this. And the first thing, I've done other side businesses, et cetera, over the years. And one of the things that I've always thought about is that when you do it with a partner, it is so much easier than doing it alone. Honestly, being a solo entrepreneur is so hard. And so I really decided I wanted to find a partner to do this with. And I owned one, but I wanted to go raise more money to buy more. I wanted to put offers on more. And I knew that if it was just me, it would be really, really hard. And honestly, there have been a few businesses where I've been, where I started them, sort of that, kind of get glossed over on your resume, right? Because only the successes make it to your resume. Let me make it really clear about that. So the ones that failed along the way are not on there. But one of the things I noticed was that, hey, like in all of those, I was trying to do it by myself, and that was really, really hard. And so I decided I'm going to go out, and the first thing I'm going to do in terms of infrastructure is I'm going to go find a co-founder who is different than I am, has a different mentality, thinks about problems differently, and has a different skill set than I have. Because, look, I'm a product, IT and operations guy, product technology and operations. I am not a marketing guy. And so, and I'm not, I know something about SEO. I knew something about, pay-per-click. I'd been on the internet for a long time. So none of those concepts were foreign to me, but I had never done them as my real job, and I had no expertise in them. And so if I'm going to scale up the company and do a bunch more stuff, I need skill set, that's as good or better than I am in that domain than I am in my domain. So I thought about all the people I had worked with over the years who I respected and who knew something about this stuff, and I landed on my co-founder, Nirav, who's on our website as well, who runs marketing for Profound Commerce. And I basically went to him and I said, God, buddy, like, I have this incredible idea, like, this is the most amazing thing ever, this opportunity. You've got to come on board and join me. And he's like, what are you talking about? Like, I have no idea what this thing is. Like, it's the same conversation I had with my investors, where it's just like, you're crazy. What do you want? You want me to quit what job and do what? Like what? But over the course of a period of time, he and I had many deep conversations, like over a month or two, and I kind of showed him everything that I had learned in the 4 or 5 months that I had owned one. Talked about what other things I was looking at and wanting to target, and at this point it was still only me and a little bit of help, in sort of random places. And I basically said, look, I want you to come on board. I want to call you a co-founder of this company. And, I want to do this together as partners. And eventually I talked him into it. And so that was the first piece of infrastructure, was find somebody who you respect, who complements you in terms of your skills. And then you've got a partner in crime. You've got a shoulder to cry on when it doesn't go well. And you've got somebody to strategize with, in terms of what to do, right? And so, from there, we bought 2 more businesses, and then we also realized, oh my God, we need a lot more help than we have. Like, what have we done? We just got ourselves into, we had to go raise more money, because again, I did the same thing, which is get the deals in the old days, you could get the deals under LOI and then go find the money. You can't do that anymore, honestly. You got to have the money, because nobody's going to sign, there's so many people running around with money, nobody is ever going to agree to sell your business if you don't already have the money. And so, it became okay, well, I'm going to be the product, technology, and operations guy, and Nirav's going to be the marketing and the analytics guy, and we're going to go figure out what are the skill sets that we need and what does the organizational structure look like to actually operate these 3 assets that we're now going to buy. We're also going to go, kick off a fundraising round, and rather than, just me saying we need millions of dollars, which is what we needed to go get these deals done, it was going to be the 2 of us, and we could leverage the combined power of our networks as well. And so, that was helpful too. And so that was the first piece of infrastructure, is go find someone, either you hire them or you make them a co-founder by, giving them a big slug of equity in the company, and, find your partner. And then it was, okay, if we have these 3 things on board, what are all the processes, and things that we need to be doing, right? We need to be doing product innovation. We need to be doing Amazon listing optimization. We need to be running our, paid advertising campaign. We need to have customer service. We need to have, on and on. We need to have analytics. We need to know, what's selling, what's not, where the problems are and where the good things are. So, you start to map all this out, and you look at like, well, how much money are we generating? How much are we, how much do we owe our investors on a regular basis? How much of our funding is debt versus equity? Equity, you don't have to, it's basically permanent capital. Like debt, you probably have to perform on in some way, and you got to, send money out the door to pay interest payments or interest plus principal or whatever. And so, you start to just break it down and think about what do you need.
That's awesome.
And so that's what we did. And you also think about, well, how much money do we have, and how do we make that money go as far as possible? And that's how we started to develop our, because that's how we started to develop our operating model for Profound Commerce, which is heavily focused, as you sort of already alluded to, on distributed people as well as overseas folks. We have a very small team here in the U.S. We only have 4 U.S. heads, inclusive of Nirav and me, and then we have another 14-person team in the Philippines. It's truly a team. We don't consider it to be 14 VAs that we stitch together that are all over the world. We actually have our entire team concentrated in one geography in the Philippines, in Cebu City, which is in the southern part of the Philippines. Manila's in the north. And so, we started building up various skill sets there and creating an operating model. And it was a lot of effort, honestly. We had some good fortune along the way to find some really amazing people who really have helped us. But that's kind of what we did. I mean, it's not honestly, it's not rocket science to break down what are the different parts of the business. The hard part is, how do you find good people? How do you train them? How do you mentor them? And how do you grow them to really be able to execute for you and your business? And that takes a lot of effort, it takes a lot of time, and it takes a lot of focus. And so that's really what we set out to do. And that was not, that was very similar to my own experience in startups in Austin here in technology. Is, most of the time when I was hired, we were a small company, sometimes sub even 10 people, that wanted to be a big company, or a much bigger, a bigger company at the very least. And the goal was to raise more money, build more product, have more people, et cetera, to eventually have more revenue and profit, right? And so I certainly was experienced with, organization planning, org development, role definition, hiring, recruiting, all that sort of stuff. And we just put, all that into practice. But instead of doing it in Austin, Texas, we did it in Cebu City, Philippines, essentially 100% remotely, because we were still in Austin, but they were all there. And so, that's what it became. And the reason we did that was we felt like if we can nail this model, we can be so much more efficient. Or another way to say that, we can make a single dollar go so much farther with respect to the output we get from the people that we have working. And, our goal is to hire and train people who are of the same quality from as in the Philippines that we would find in a Western geography like Austin or Boston or New York or San Francisco or wherever, Park City. And so I think that has always been our goal, but to do that at a much lower price than we could pay.
Human capital arbitrage.
Yeah. It is essentially human capital arbitrage, but it requires a lot of effort because Amazon on some level reminds me of what I described in the early days of the internet, when I was pretty much fresh out of school, and as I like to say, nobody knew anything, so experience was suddenly devalued, right? I think the Amazon space is sort of similar in this regard, which is, look, you can hire people who know digital marketing, you can hire people who know SEO in terms of Google, and you can hire people, who know how to sell enterprise software. There's a very well-developed industry of talent for software companies, for conventional internet companies. There is not a deep and rich and experienced talent pool for running Amazon-based businesses. Not to say that a lot of the concepts from those other, disciplines don't apply, but the specifics are very different, as you and I have chatted about many, many times. And so there is no market for talent for Amazon sellers, whether you're an aggregator or whether you are, it's starting to happen a little bit, whether you're an aggregator or whether you're a solopreneur or anywhere in between. There are a bunch of people, with Amazon marketplace seller experience on their resume out there, right? And so you're either building that from scratch here in the US, if you're me, or you're building it from scratch wherever you choose to locate in the world. And so, from my perspective, it didn't feel like very different to try to put this together in Austin versus to put it together in Cebu.
Yeah, brilliant.
And so, but it sure seemed like it was a lot cheaper. And if we could access people who were, talented there, we could really make our dollar go farther. And so, we always will have a hybrid model, or offshore and onshore, or, low cost and higher cost. Like we're growing headcount in the US now. We're definitely growing headcount in Cebu as we continue to expand. And so, the goal is just to have a more efficient business that's honestly either more profitable or allows us to spend more money on things like marketing. And, when you're more profitable, you can put more money back into inventory and growth. And when you're more profitable, you can spend more money on marketing because, the points on your P&L that you would be spending on headcount, now you can spend on media and advertising. And so it's just that simple. Like, that's how you're going to have a better business than anybody else. And so that's what we looked at, and that's what we started to build out. And so, if we now have a team that is very, has 2+ years of experience on Amazon, which is 2+ more years than anybody else has, honestly. And so it's amazing. That's awesome. Frankly.
So I guess kind of turn the page again. I'm curious on a couple of things. So kind of 2 closing topics. One that we'll start with is just your advice for sellers. Obviously you can't replicate
Yeah.
what you did because times are different, context is different for a lot of different reasons. But like, if you
Totally.
were in your shoes, that you were in 2018 now, and you're talking to people that had maybe either thinking about starting or had started an Amazon business and are starting to kind of get the itch and starting to see the things that you started to see when you generated success. Like, what's your advice for folks that are in that stage, and what wisdom can you impart given the
Yeah.
journey you've gone through?
This is a great question, Adam, and you and I have talked about this a little bit because I think the world is really going to change over the next couple of years. And if you are an Amazon seller in the sense that you are sort of a smaller, and I hate to even use the word subscale Amazon seller, it's going to get harder and harder for you to compete. And so I think, look, whether you're me building a team or whether you're one of the other 50 aggregators who are building a team of expertise, these guys have a lot of capital, me included, and have the ability to go buy, a lot of talent out there that may not have Amazon specific domain knowledge today, like I was describing, but have significant experience in e-commerce or just in general in internet and business. And so when you play out the next few years, you're going to have a bunch of very large, very well capitalized companies that have, sort of some number of them are going to figure it out. They're going to get their Amazon degree, as you and I like to say, over the next couple of years, and they are going to become very, very successful. And they are going to become formidable competitors in whatever categories they choose to play in, or products or keywords, however you want to think about how Amazon is organized, if you will. And so, if you are a seller competing with me in one of my brands or with any of the other aggregators, and there probably are even more aggregators than we know about, and there are probably even more that are going to get funded, maybe even some that are going to get funded in this hour-long conversation we're having, Adam. It's just so crazy how frothy the market is. And so if you're a seller in that market, you really have to think about what is your edge.
Yep.
If you're a smaller seller. And so what is it that makes you special, I don't want to be too cliche, but makes you world class, like all of those sort of notions. And if you can't answer that question, I think you need to think about, sort of what is the future of your business. And I think you have a couple choices. One is you try to develop that proprietary edge and you try to outrun those guys who have greater access to capital and honestly greater access to talent than you have. And you might be able to do that for a very long time and you might be successful at it. So I think that's one choice. I think a second choice is basically to sell your business, which a lot of folks are doing right now, right? Which is, there's just an incredibly active and liquid market for trading Amazon-based businesses right now. And, the multiples are going up, as we all know. It's getting hotter and hotter. More and more people have entered the space, as I've said, multiple times here. And so, this is definitely a great time to sell your business if that is what you want to do. I think the third thing that you can go do is you can try to grow in your own sophistication in terms of, you can go, if you know Amazon and know what you're doing and know how to grow and expand and operate, and you have a way of doing that that is successful and works for one brand, you yourself can go out and try to find money and start acquiring brands. And so I think that is like your three choices. It's like either you develop proprietary edge and you keep going, but if you don't have proprietary edge, look out, or you sell, which is a totally noble and amazing outcome for everyone, or you start doing what the aggregators are doing, which is you go buy more businesses. Even when the first one you started from scratch, you go buy other people's business. You go buy your friends' businesses that are in your mastermind. I mean, you really, you go. And I think that when you play out 2 or 3 years from now, that's what the world's going to look like. It's going to be some number of folks who really have some sort of advantage that is durable and sustainable, and they can continue to operate independently. There'll be a whole bunch of people who have exited and either are trying their second act on Amazon or maybe even working for the people who bought their business. And then there will be the third act, sort of the other version of it, which is that, you decide to try to become one of the aggregators. I don't think there are really any other choices besides these three. in the long
Dude,
run.
that's cool. What you just
Honestly.
talked about, I think, is just like exclamation point gold. How you broke that down, I think that's fantastic advice for everybody, and a lot of kind of the ethos that I try to kind of carry on is wrapped in that. You know, if you're going to be in this game, you've got to do it in a thoughtful way that has an edge. I always kind of talk about it at the product
Yeah.
level more, but it really cascades to the business level and ultimately to you as an entrepreneur, which is why. Like,
Yeah.
why would somebody buy your
Absolutely.
stuff?
It could be
Yeah,
anything, Adam, right? It could be you're amazing at getting your product into a bunch of international
yeah,
markets, right? So you're really good at that. And so you know how to do that. And all of a sudden you're on all 15. I can't even keep track of how many there are now, 15 or 16 Amazons. Maybe you're really good at other marketplaces too. So you're on Walmart and you're on eBay and you're, or wherever, not sure you want to be on eBay, but you're on Walmart and, maybe others. And so like, you really know how to do that. And your edge isn't necessarily that you're great at launching products, but you know how to get that product into absolutely every corner of the globe and maximize that, supplier relationship you have and maximize the 1 or 2 or 10 ASINs, however many you have, and to really drive those. Maybe you're amazing at that. Or maybe it is that you're great at launching or, whatever. It can be so many different things. But if you're not great, if you're not good at one thing like that, or at least one, I should say, I guess, I think you're going to be, long-term, sustainable, durable. Like those are words that are not kicked around enough in the Amazon space. Everyone's like, look at my incredible sales growth. And it's amazing. But like, are you going to have that same revenue in 5 years? Like, and what are you doing today to make sure that you have it? And that, by the way, that's not just a tough question if you're a solopreneur or if it's a tough question if you're an aggregator.
no, I think
by the way. Like
durability, you
like
nailed it. I think people throw around sustainability a lot, but durability, I think, is because it's got the gauntlet ready. Because some shit's gonna happen. Like you're gonna get punched in the teeth, and it's like, can you
well,
take
I
a
mean, and
punch?
that's all part of
So
absolutely. That's part of getting your Amazon degree, right? Is to get your ASIN shut down, to get your account shut down, to have your 3PL lose your inventory, to have your freight forwarder have a container fall in the water, to, have Amazon not checking your inventory for 60 days. Like all of that stuff is what you go through to get your Amazon degree, if you will. And, yeah, that all that is going to happen to you. And so, yeah, you better
love
be
it.
ready.
All right, man. So I guess just to close it out, I'm curious your take on your future. So you kind of gave words of wisdom, which I think were fantastic
Yeah.
to the folks that are tuning in.
Yeah.
But what's next for you? Like, how are you seeing both your personal path as well as the profound commerce path kind of transpiring here in the near term?
Yeah, I mean, those three options that I listed are not different for me than they are for everyone else, honestly. And so, I think we're trying to fire on all of those, on some of on all of those cylinders, if you will, which is, we are trying to develop proprietary edge. Not things that violate Amazon terms of service, but like things that we know how to do better than anybody else. And really be able to hang out. What are those for our company? And when we go talk to investors or whatever, like what do we say in that regard? How are we different? Not just than all the other Amazon sellers and all the other aggregators. Like that's an important component. I think sort of we'll come back to the middle one, which is sell. The third one was continuing to buy businesses and expand. So we are absolutely doing that. My goal is to continue, look, we're small fry compared to Thrasio and their, I've lost count, but last time I heard Ken Kubek say it was 107 businesses. It's probably, 120 businesses. And just like another Amazon aggregator has been funded while we've been talking, Thrasio is probably one other business while we've been talking. So, they're probably up to, God knows how many. And you've got so many other folks who, have raised 9 figures. Look, there's $3 billion that have come into the space that we know about, that have come from announcements. There's even more that is unannounced. So there's billions and billions of dollars sloshing around. So we have to continue to acquire and raise money. And then I think the middle one is really interesting, even for the aggregators, honestly, which is, over time. Look, the Amazon marketplace is, something like total revenue 500 billion or more, right? So even if you had, it might even be 750 billion. And so, they're a little squirrely about that over at Amazon, how big this thing really is, right? But say it's 500 billion, and you have some number of aggregators that all have $1 billion in revenue. Even if you had 50 aggregators that had $1 billion in revenue, assuming I'm doing the math correctly on the fly, which I think I am, that's 50 companies with $1 billion, which is $50 billion in revenue. That's still only 1/10 of the marketplace, right? 50 over 500. And so that's kind of a stunning thing. And it makes me think that this, is going to go on for a long time. At the same time, I think that eventually we will see consolidation among the aggregators, something that you and I have also discussed many times, Adam, which is some of them will fail and sort of get sold for scrap to other aggregators. Some of them will be uber successful and will essentially continue to have infinite access to capital. And then there'll be some in the middle, and there'll sort of be this logic to merge with other aggregators in order to get more scale, in order to, sort of be better. And, very often in M&A, as you know from your own M&A background, like put together two bad businesses and maybe you have a good one, right? I don't know if that ever really works, but there is a lot of deals that are kind of done on that logic. And so, for Profound Commerce, back to your question, like one of the things that we think about a lot is, over time, who are the other folks in this space that we want to be close to when the consolidation comes, so that we know who we want to work with, whether that means they buy us or we buy them. I have no idea. But that's, I think, coming in the future. And so we think about that too. As I said, it's no different for us than it is for anybody else. Maybe Thrasio is the only one who isn't thinking about selling to somebody else. But if anywhere else you are in the market, you're thinking about all those three things. How do I develop proprietary? Should I be selling rather than buying? And if I am buying, what should I be buying, right? Like that is the
what's
game.
Interesting about that, and it's kind of the theme of this story that you've talked about. But I think for me, it kind of goes back to poker. I played a lot of poker in college, and I went to school on the border of Montana and used to make money off drunk Montanans coming to Canada to the casino on the weekend. But the chip counts, the value of the chip counts change, but the game doesn't change. You know what I mean? Like you're still making very similar decisions. Just the scope, scale, and risk appetite needs to grow with that. But Matt, I absolutely wasn't lying when I say that you are one of the most intelligent, thoughtful people in the space, an amazing human being, super aligned to how you operate your businesses. Definitely learn a lot from you. It's great to have you on. Maybe this will be part one of multi-part series that we'll do over the years, because I'd like to kind of.
Sorry.
Go ahead. Yeah.
Thank you for all the compliments, but one thing about me is I'm not. I am verbose.
We'll edit. We might do a little bit of editing, but that's okay. But there's just nothing but
Fair
gold,
enough.
man. And I have a ton of respect for you. And I guess just to put a bow on it, if somebody wants to sell their business to Profound Commerce, learn more about you, reach out to you, what's the best way to kind of carry this on if someone's watching this video now or in the future?
Feel free to send email to info@profoundcommerce.com or even mhowitt@profoundcommerce.com. I am an email maven, and I tend to engage with every email I get, so you will definitely get a response from me. If you send it to info, it'll go to a broader swath of people in the company. If you send it to me, it'll just go to me. But I welcome all folks who are in this space, and I love hearing, like you, Adam, I love hearing people's stories and what motivates them and drives them, and learning more about their businesses that they have, whether they want to sell today or tomorrow or never, for that matter. And happy to engage with people if I can help, if I can buy, or whatever. So that's how you get me.
Well, again, it's really cool hearing kind of some of the stories that you don't hear often in the space. Like there's a lot of undercover talent and just stuff happening with really intelligent people doing cool stuff in the space that you don't hear about. I think you're definitely one of them, Matt. I'm glad to have crossed paths with you kind of in our mastermind, and obviously having you on the channel has been a treat too. And excited to follow your journey, lock arms with you along the way. And if anything else, this is fun as hell, and I think you encapsulate that in what you've pulled off. And I'm really stoked and excited to see where you take it next. And we'll see what happens.
Totally. Thank you. I didn't answer your question about what's next for me, but the bottom line is exactly what you said. This is just so much fun, and I want to keep going, no matter what. And so I think you and I both share that, which is this is just the most intriguing, dynamic space we've ever seen. This is the most exciting 2.5 years I've ever had in my career, and it's only getting crazier and more amazing, honestly. And obviously, lots of crazy things happen all the time in this space, and you never know what's coming at you. Some of that I really enjoy. Some of it keeps me up at night. But I think overall, I wouldn't trade it, as I know you wouldn't either. And it's such a fun place to be. Who has this much fun at work? I don't think anybody does. Cool. This, except in this space. And of course, lots of gray hairs. Thanks, Amazon, and receding too. So
it's not good business for hair,
but it's all worth it. It's all worth it.
A good business for everything else. Yeah, cool, man. Well, hey, again, it was a pleasure having you on, and again, we'll have you on here again. And I'm curious to see the journey, but it was a pleasure, dude. Thanks again. Yeah.
Thanks, Adam. It was great. Cheers. Really enjoyed it.